All right. Welcome back. Welcome back to another session, another weekly watch list session. I'm back. Happy to really be with you guys again. Had a, small trip, which kind of, take some off of, trading and overall what happened in the market. And funny enough, during this time, we had this banking crisis. I was traveling also. Uh, so we had to skip the last weekly watch this session. Although I sent you guys a handful of back pocket watch lists to watch for the upcoming week of it, and then keep you guys updated while I was traveling on my trading setup, travel laptop, and then the trading setup was different than my trading station out here in West Coast. So it's just it's been crazy. It's been crazy, man. I have been yelling that we're in the past few months or so, even the last year, I have been really dive deep into the huge problem of U.S. economy since COVID. Also, these are all started from COVID, and after that things got really out of control, and we had all these Fed rates. Fed hikes the rates, and massive layouts, and lots of problems combined together. And it was the moment that I witnessed that there is a really bigger problem than just what we are seeing every single day. However, as a trader, and I always mention to you guys, do not really let the noise bothers you when you are trading, when you are day trading, because the noise is gonna be always there. There's always a bad news. There's always this cycle going on with the economy and what's gonna happen with the Wall Street, and Wall Street people are doing really crazy stuff, and we have to save. It's all kind of stuff that comes out, and for you need to be prepared to be able to take this as an opportunity, and really put as much as possible energy, time, and effort. Use this moment, use this time, that it could be one of a one time opportunity in life to see a crisis. And if you're ready, if you're prepared, I mentioned many times, always be liquid. And I'll talk about what exactly the liquidity problem nowadays, than just the other problems than unrealized gain and the stuff that happened with the recent SPV. But I always mention you guys to be liquid as much as possible. Cash is the king. Obviously, it's very hard to trust the system that much, but I mean, it's not gonna go anywhere. We're talking about lesser size that you can obviously be able to manage and be happy with the money that you make. We're not talking about billions of dollars that could wipe out in one transaction. One bank can destroy many jobs, many lives, many businesses. So we're not talking about that. We're purely talking about what actually you could do in order to be ahead of the time. Don't let the fear, panic that is going on overall in the market get into you. Create that bad decision making and get into you and make you do crazy stuff. But if you follow, if you learn, if you figure out the strategy, you will definitely will benefit from it. You will definitely enjoy this cycle in crisis, whatever you want to call it. And on top of that, you will be profitable than other people that are losing money because of the fear. So you want to be smart about it. Just try to avoid noises. Focus on your setup. Focus on our everyday scanner going on. Our everyday, that what we're talking about. What are the activities? Obviously, it would be much riskier and less liquid in terms of how many traders are around. But stuff like this, which happened last week, it always creates volatility. So if you were smart enough, if you were prepared enough, I want to say smart enough, if you're really prepared, because I don't really like to use that word. If you're prepared, you will always take advantage of that. Like, for example, we had this wall. It was a banking stock. And I'll go over what happened with that ticker. But before I go, I really want to clear some stuff out and what exactly has been going on with the U.S. economy. Are we in this big, lie that we're living in? And really, it's very, crazy what's going on out there and what are they doing with the people's money, all these banking failure that are essentially going to be a domino effect. I mean, after what happened with this Silicon Valley Bank. So that's kind of a thing, a charm on it. I mentioned few videos back. I mean, you can go back and watch it. In order for us to, get into that recession side, get into that kind of domino effect, we do need one banking failure, and that exactly what happened. I wouldn't say that is, kind of a prediction. I don't like prediction. I don't like to use that word, and whoever used that word, it's not a proper analyst or whatever you want to call it. It's not right to use it. But based on the probability, based on what information available to you, you could put things together and realize that what makes sense and what could possibly happen. I mean, if you put it in this scale and really calculate what are the possibilities, you could definitely see that coming. And I was mentioning that it could essentially happen, and unfortunately it happened, and it does really affect other banking. And we had this banking sector volatility for the past week, and we will have it essentially in the upcoming week. This thing's continue. This is a big thing. This is a breaking news, and we will have to deal with this. We're probably gonna see so many pump and dump activity, a lot of insider transaction on the smaller banks, and those are the stuff that are happening. Definitely keep your eyes on the sector, the financial sector, and be ready for it, because at this point, we have government overwatch, but there is no real, designated, I guess, something that can really control these pump and dump action. Maybe in the future they investigate it, but these stocks are always doing that. These stocks are always manipulated. So us as a trader us as a retail, we need to make sure that we are prepared, we're studying, we have enough knowledge to also take advantage of this, take advantage of the mood, and we can make money as well. Why not? Why everyone can not make money when we can? I mean, that's the goal. So before that, I really want to talk about what exactly happened with this overall, SPV news, that they defaulted on their unrealized gain, and essentially government stepped in and told bigger banks like JP Morgan and all that, well, this actually happened, and then they defaulted. They try to really save the uninsured depositors. Basically, what uninsured depositor means is the people who has deposited. I mean, they have more fund than above the limit of FDIC. So FDIC limit is basically at this time is 250,000 individual. And I'm not exactly sure. The joint should be 500, 450 if I'm not wrong exactly. But I do kind of have this interesting picture of the FDIC, which I'm gonna talk about it a little later. So basically, uninsured depositor are not covered, and government wanted to step in and taking over. Kind of, do the survival for them. I mean, be a savior for them, and unfortunately, that is not gonna happen. That's fortunately actually, because that would be very difficult and a lot of problem will create it. And now we have this FRC, First Republic Bank, that is going to go bust, which government stepped in and told the bigger bank like Bank of America, JP Morgan, to, hey, you guys have to bail out this bank and figure out the way. So what happened is people who basically have had deposit into FRC, they withdraw their money and they put it back into they put their money into their Chase Bank, or they open a Chase Bank, or Wells Fargo, or Bank of America, or different more established and stable banking, and they deposited that, and then turns out a few days back, I think it was Friday or Thursday, that there's a bailout. There's a bailout for FRC for $30 billion from other banks, which means that basically all the people who has their money from FRC that deposited to other banks, they basically lend those money to save the FRC. So it's kind of like a cycle that happened, and it's just in between. There's these people who work with this bank. They got screwed. So that's something to keep that in mind of what exactly going on. And I wanted to kind of give you guys a brief understanding of what exactly is happening. And as far as FDIC, this picture I put it up for you guys to kind of give you guys better economic lesson. Well, this is more of a finance lesson, so you gotta keep that in mind. We had this FDIC insurance limit since 1934, and the limit since that time was 1934 was 2,500, and then throughout the years they increased that over the 5,000, 15,000. I mean, these are the events that happened, and FDIC needed to increase that. So basically, this limit is kind of nonsense at this point. And since 2008, we have this 250,000. What is it called? 250,000 limit. And since then, nothing has changed. According to the history, you can kind of predict when an event like this happen, when FDIC needs to step in and save a bank. There's always a major changes. There's always going to be a major changes. So it will probably gonna increase that FDIC level to 1 million or 2 million. Based on kind of my analysis, it would definitely be that in that range. I mean, be in that range. But we'll see. I mean, this is very interesting to know. I just want to put it here just for your information. It's really good to know that. That's the history really affect the future. So it's just something to keep that in mind. I mean, let's see what's gonna happen. We're gonna have a really bumpy road for the next few weeks, next few months. 2023. It's not gonna be a really easy year. So hopefully everyone's are ready. Before that, I mean, let's get into our watch list. But before that, disclaimer: whatever I am talking and everything that you're seeing in this video, it's only for educational purposes, and it's not an investment advice or recommendation or solicitation to buy or sell any securities. So if you don't really like this, you can shut it off and go watch another video. All right. So last week we had this, obviously the banking chaos, and we had this huge runner, great runner, dead cat bounce play, right after. This is the classic one, actually. This is a classic setup that I personally loved it, and one of our great great members and a student, Steve, made a killing on this trade, and I think I mentioned it in our channel. If you haven't take a look, you can scroll up to our channel and then go back, see the screenshot. But here, Wal, WAL, this was a great opportunity. Actually, this is a great example. This is a great example of dead cat bounce, classic one. Surge of volatility right after the big breaking news, and then flush down, and you can kind of realize that there is certain level that when the stops hit, when all the stops are triggered, they get filled, and then we have this massive flush. At some level, there's a price stabilizing. So you kind of can catch that. It's very difficult to catch that because the volatility is huge and the spread is pretty crazy, and it's not really recommendable for someone that doesn't really see that, doesn't really use direct market access or seeing that price action. So you kind of want to wait for price stability and the candle kind of form and set up for another, if it's going to really give you a confirmation. And that's what exactly happened. And obviously this is a real manipulation or like sell off and buying the fear. I mean, this is a great example of a good success, I would say, when you buy the fear, you execute it correctly, you really can scale out nicely and get out with a huge profit. I mean, this is a perfect example that we have. And this WAL, it is actually 100 million. Yes, it is 100 million float. So what exactly happened was, we don't see much activities on the price action on these tickers, especially this banking. I mean, they're very slow. That's why we don't have them on our criteria. However, whenever there's a trend, we want to be there too. We want to take advantage of that as well. That's why we have it on our scanner. Doesn't matter. The volatility is there, and the price action was massive. I mean, stock just dumped all the way from 76 to $7. I mean, that is a huge drop, and you can imagine that how many times that would create float rotation. What's float rotation? Which I talked about it in my course. Float rotation basically means if the stock has, let's say, 2 million float available during the day, that 2 million can rotate so many times based on the average volume that has been traded. But for a stock that lower float, that happens continuously. That happens every day. So you don't really see that much. I mean, that's very normal. But when that happened for a higher floated stock like this one, we are talking about we're talking about 100 million shares that has been rotated. So that is a massive share rotation. So I think if I'm not mistaken, well, so that rotation happened throughout few days. It didn't really happen in the one day, because in the biggest day we had 33 million, almost at 50 million here. And the next day we had 20 million, and then a few days after, we had this rotation. If you calculate all these numbers together, it would be a decent float rotation altogether. So that's a freebie right there for you guys. So you can take a note and have it in mind that why float rotation could happen on a bigger cap and basically a higher float stock. So that was a beautiful setup. I still have it on. I put it on the watch list. The reason that I put it on watch list is because I'm personally very bearish on all these banking, all these tickers, but I do want to see a setup to really appear and represent itself. If not, I don't really want to get into the short trap or anything like that. This is really good example of get into that shortest squeeze and get burned. But however, the stock has been steady for the past few days, and the last day, Friday, stock decided to really have the lower volume, lower activity, and essentially kind of fade out. So what I'm expecting on Monday is breaking news. Only you should expect news on all the banking, and based on that, make your decision to see if can really create a setup for the downside, and then you get another cap. You can get on the short side for another flush time, and then catch the bounce of the bottom, and then possibly run it back high. But what I'm expecting this pattern to shape is, if the flush continues, we might see this bank is not going to survive, and that would be a really huge problem. It's not going to be only this one. This is a sector problem. Keep that in mind. This is completely different. This is a sector problem. It can really affect all of these banking stocks. So you got to keep that in mind. It won't be only this one if the flush really happens. So you got to watch the S&P 500 at the same time, and all the sector related stock at the same time, and really they really affect on the news activity. So other than that, you could see insider transaction that could happen throughout the days. CEOs, CFOs, they really try to dump their position before they go bust. So those are the kind of mindset behind all these actions. So those are the things that you can take advantage. This is a great example here on the second day. Huge run pre-market. We had this great profit taking right here, right at the VWAP rejection. create another short opportunity, and then right after, right before the market close, we had this another bounce back up to the VWAP. So far, hold, near that VWAP, try to continue consolidation. So you should try to really avoid this consolidation, unless if you see a breakout. If you see a breakout, that would be a good setup, and then another gap down possibly. So I mean, this is the whole idea of this one for me personally. Other than that, I would avoid doing crazy with this. This is high spread, so you gotta keep that in mind. Can have that huge spread, and be very cautious and mindful. If you're newbie, do not really try to go crazy and touch this. Next one I have is PCT. PCT was the actual earning runner on Thursday. So earnings are not recommendable for short. I did suggest you guys this is a great long trade at the open, and we had this setup for a long, and that was a massive play. Well, I mean, compared to other tickers that we had on that day, PCT was the winner. For me personally, I took advantage of the long side of it. I took advantage of the short side of it, but I wasn't ready to really sit down in the afternoon, and just I missed out the whole kind of pullback over the afternoon, and the reward wasn't that much, so I didn't really want to waste my time. But the second day, which was Friday, and that creates a multi. I mean, this became the multi-day fade out, and that was what I was looking for on Friday. Shorted to the pop, rejection, and continuation to fade out. So that's what I'm kind of looking for, possibly for Monday, if we are going to kind of have that bounce pop, cover pop. This was more of a cover pop action here, and then fade out. I'm looking to see if there would be more cover pop, and possibly another breakout opportunity, and then because the new high is pretty close, it can really reach that level with no problem if there would be a fresh volume. I do like to see this thing to pop back up again and then fade out for another short, but on the long side, still looking better if they really keep this up. PCT, they came out with the news on Friday. Oppenheimer analyst Noah Kai maintains pure cycle technology PCT with an outperform and lowers the price target from 14 to 10. So that's there. Keep that in mind. Analysts are not happy with this, which is some false stuff that you should not really rely on these analysts that much. But that's something to keep that in mind. They have 60% institutional ownership, and yeah, that's it. I do not see any filing. If they have, I don't think so. I did not check that actually. Well, yeah, they do have shelf offering, as a matter of fact. They do have shelf offering, so that's something to also keep that in mind. Keep that in mind. All these shelf offering probably going to take place before these madness happen on all these companies, possibly. So that's very possible. Something to keep that in mind. Every company, every stock that has S3 on file, they could really essentially do that. It looks like they had it last year, so it's still valid filing. I mean, S3. So yeah, that's another thing. I have it on our main watch list, the WAL and PCT. On the back pocket, I have Zim, which we traded from Monday. And that was also another really good play from the pre-market. I have this one, and then AIMD. These are the stuff that can really get attention again. Otherwise, we might have new tickers going on. And PACW also popped on Friday. This was also something to really watch and see how's the gap really can get filled on this one as well. And THMO had this pop out of nowhere on Friday. So I put it on our back pocket watch list to see if it's really get attention again. So this is really an attempt to bring interested buyers or traders into the game. And then lastly, I have FRC, which is the main watch one. This is really great stock to really short overall because of the current condition. Due to their news, they're going to have a bailout. They had this massive run up again, but I'm not too optimistic. I'm not too optimistic on all of these, but I'm not saying that there's not going to be an opportunity on the long side. We're probably going to be a lot of short to squeeze. You have to be careful with that, and yeah, let the setup comes to you. Don't go after the setup. Let it come to you. And lastly, we have our swing BKI, which unfortunately I had to cut this, as I mentioned 2 weeks ago. I do not want this to really get back to that 54-55 level, which is already hit. I was able to I was able to manage my risk. So for me, it was enough to have that 54 level. Because of the current condition, I don't really want to hold something that really related to lending and all that. However, I did stick to the technical side of it. I did not really. I only use the 30% of the fundamental. So I talked about the had to combine fundamental and technical in my course. So that's something to really watch it. But yeah, BKI, I'm done with this. And yeah, I cut it. So the max level on this one, it could be 50. It is 5380. 5380. I think the lowest. I believe. Oops. Yeah, 5385. That is the lowest. So you want to watch that area if you're still interested in this one. But I don't really want to really have that hope and hold. I don't trade like that. I have plan, and that was my plan. But 53 can continue draw back down, but it really affects on the market condition. So you got to keep that in mind. It can create a really good opportunity, discounted price, but I'm not really, I didn't really care because I started small, added small, and then cut it small, and then cut the whole thing for a really small loss on this one. So I don't really care about this anymore at this point. I will revisit if we will see some sort of major news and setup happen to the upside. I like to really trade this into the upside rather than adding to the loser. So that's something to keep that in mind. Anyway, that's our watch list for this week, and I will have our course news by next week, hopefully. As I kind of told you guys, mid-March, but I was traveling, so the course is almost. There's only some editing part left, and we should be good to go. Anyway, if you guys have any question, reach out to our team and support, or reach out to me and let me know what you guys think and what's gonna happen with the market in the future. comment below, like, and all those good things. Take care, team. Talk to you guys next week. I mean, in our channel